Hey everybody, welcome back to Ryan Makes Sense. Today we are looking at a viewer requested video. This is ticker symbol EQNR. I have no idea what the stock is or its history, so we're going to review it together and see what we come up with. And as always, go ahead and hit the subscribe button, hit the like, leave a comment, or the dislike. Let's go ahead and figure out if EQNR is worth $28, what institutions and hedge funds are doing. We'll run my calculated stock price, uh, projected stock price calculation, and we'll also look at support and resistance. So without further ado, let's go ahead and jump on in. All right, just kind of gonna peel back and go back as far as I can, just kind of get a picture. Okay, so this was trading as low as $5 back in 2022. It's at $28 now. Looks definitely like a potential cup and handle. We have our cup handle. Let's go ahead and move on. Looking at overall RSI, kind of looks like it is in a downtrend for now. The momentum looks like it is trying to go back up. Money flow is going back up. We can see this nice sharp move up. This could be leading to the momentum right here reversing. And also our relative momentum indicator looks like it is curling up right there. So if I had to say, I would hold for now. I just want to run some more information. Our price to earnings is cheap, 8. Typically 15 is like a standard normal average. Forward P also cheap. Gross margin 32, that is considered high growth. They are profitable. They offer a 9% dividend. Wow. Wow. Okay, and let's load EQNR. We're just going to go ahead and see what institutions are and hedge funds are doing in a moment. Good volume. They do hundreds of billions in dollars in sales, which is crazy. EPS kind of all over the place, sales kind of all over the place. The one thing I think we'll find common ground on is the shares outstanding. When it's going down like this, they are naturally being accumulated by institutions, hedge funds, and people like you and I. And the company is not diluting shareholders. And that is good considering this is a foreign stock, Norway. So a lot of times you'll see foreign companies um, that pay dividends or premiums will continue to add shares to the supply. So uh, overall, this looks really good. Sales over the past 5 years, positive. EPS over the past 5 years, positive. So they've been resilient through the pandemic, which is great. We don't know what they do. Oil and gas integrated. So let's actually just open up the website because I'm interested and we'll read what it's about too. Um, let's go ahead and quick ratios over 1, meaning if they close their doors tomorrow, they could pay off any debts, liabilities, notes, etc., loans. So I'm not really seeing any red flags here. Yeah, let's move on to phase 2. Okay. Before we do, I just need to make sure this is in US dollars. So pardon me while I scroll all the way down for a moment. Sorry, sorry, sorry. And you can see right down here. Do you see it? USD. All right. Apologies. All right. So this is going to be, I'm just going to remove a couple things so it is not confusing anybody. So the market cap is 78. Everything is in billions. I'll just go ahead and type it out. 78 billion, 70 million in market cap, which is huge. They do have income of 9 billion, 590 million and sales of 102 billion, 730 million. Wow. And then cash on hand, we're going to go all the way down, all the way down. And I do just want to take a peek really quick at the quarterly. So, They're about $4 billion shy from where they were in Q1 of last year. So that's another reason to just kind of take a breather for a moment on this one. Cash, they have 37 billion, which is the lowest amount of cash they've ever had on hand. Cash 37 billion 271 million. And debt is 24 billion. Yeah. Okay. 24 billion 253 million. Okay. And then really quickly, let's look at their assets to liabilities ratio. Total assets 137 billion. Total liabilities 87 billion. So they've got about 37 plus, they've got about a $50 billion buffer. And if we look back to Q2 of 2022, they had a $40 billion buffer. So their assets are growing, liabilities are shrinking. And okay, I mean assets are shrinking, but liabilities are also shrinking. So there is a little bit of give on both ends. So that is fine with me. I mean, a $50 billion buffer is okay with me. So now we're going to go back up here. And there is, whoa, baby. What I do want to call out really quick, this calculation is not built for stocks that give dividends. It's more so based for micro cap, small cap companies. So typically, this calculation for dividend paying stocks or ETFs is on the high side because I'm calculating in all the cash they have on hand. But we have to consider when they pay dividends, they're giving some of their cash flow to the shareholders for holding the stock or ETF. So shares float, there's 2,730,000,000. This is saying a fair share price of $75, which is double, at least, almost triple current price, which is a given. I mean, we're not accounting for their dividend. But if this truly is as undervalued as this looks, and let's just go ahead and pull this up really quick. I wonder if I've charted this one before. I have. Man. I'm going to throw this mouse away. Okay, so I've charted this one before. It's not super clean. Like, what are these lines floating out? Um, and was I drunk or something when I charted this one? I really don't know. Let's go ahead and just clear all drawings. Is there a way to remove all drawings? Cancel, clear drawing set. Okay, so obviously we have what I call a cup and handle here. We do have a, you could call it an inverted head and shoulders, left shoulder, head, right shoulder with the move up, but typically the head is the lower part on the inverted head and shoulders, in my opinion. So I'm just doing some quick little chart in here. Maybe. Let's go here. And we'll take this to, I would say conservative there. Okay. So this was in a descending wedge on the monthly, which is huge. Breakthrough or a break right here. Absolutely crazy. Now let's do some fib lines because I want to see how well uh, this stock, this chart respects these candles. Okay, there's a lot of respect here. Um, this candle confirms this outer line right here once. Then if we look at this inner line, there's a lot of action, kisses it right here. A lot of resistance right there, perfect support off that. I mean, you could pause it and then just look at how many times it's perfect support and resistance. What this tells me and what this kind of leads me to believe is if I run a Fibonacci line from this low to this high, it should be pretty respectful. And it is. Look, and we'll just make it a different color to make it easier for everybody, including myself. All right, so this blue fib circle is our latest. So look, perfect support and resistance at this blue, perfect support and resistance at this line, perfect resistance right here, breaks through, comes down here, tests it multiple times. Look, it kisses it perfectly right there. So this is telling me there's decent respect here. What I also see is a potential play here. It's coming to an apex right here, and what the apex is, it's the area of opportunity. We have this blue resistance here, this line that I just drew. We have this Fibonacci circle resistance, but we also have this midline support right here. So it might try and test it and break it, and if it fails, I think we go down to 25. Again, it'll test right here. This will be another apex area of opportunity. If it fails, another area of apex opportunity. Down here, apex opportunity. Essentially, what I think is going to happen, what typically happens inside of these Fibonacci circles, and I can prove to you on this chart, while they are trading in these Fibonacci circles, they tend to stay the path, whether it's sideways, down, or up. And right now the path is down. And it basically maintains a slower rate of a move until it's outside of the circle. Look what happens once the stock is outside of this Fibonacci circle right here. It goes from 26 to 41. It almost doubles outside of this Fibonacci line right here. So I'm tapping the red line right here. Right here, there are these candles. Once the stock broke through this, boom. And we're going to kind of see the same thing happen here where it could come here, test here, fall out, and then it's now in a new range of possible accumulation or consolidation. So I think we can wait on AQNR unless you are someone who has, well, actually, I want to check something else really quick. It might get really laggy here for just a moment. All right. So you remember that cup and handle I was telling you about? This stock could literally, quite literally, at the end of the year, we're at July now. If it stays above 29, 30 bucks, this is our cup handle move. And then it has a bunch of free range in here within this fib arc. So basically, we don't hit resistance until like 2048 in 2026. That would be a pretty volatile move for this stock. I'm going to go ahead and load one more thing really quick, and it's going to get a little laggy for just a moment. So what we're looking at here is momentum. If this candle for the year can stay up and bright green, I think it continues its move up for a potential cup and handle, which would, if we do our calculation for the cup and handle, our cup height is $42. We're just going to call it $42.26. The cup low is this candle right here. The low is 984. And now we take this and we add it on top of the cup height, which is, again, 42.26. This freaking gets us to look exactly where. So, um, What are institutions and hedge funds doing? Because if they're loading the boat, that's a clear sign. So old data shows institutions own 2.64%. New data shows that they own 6.16%, which is 4% more. And that is a lot considering how many shares are float out there. We're not at all-time highs in terms of institutional ownership, but it is up from 2% to 6%, which is pretty big. Let's see. Is there a table for the big boys and girls? I don't think so. Let's see if Vanguard owns any of this. Vanguard, BlackRock, the huge. No Vanguard. BlackRock. BlackRock owns 24,000 shares. So yeah, you can scroll through this list, see who owns a lot. T. Rowe Price, 3.6 million in that one fund. So yeah, institutions are buying. Um, and again, if you have time to dollar cost average, that could happen. Also, it does not hurt to see how the next few months play out and how the rest of the year plays out, because if this could close within our inner ring right here above 30, $31, that could be pretty magnificent. So, and this is a freaking high paying dividend company. 9%. That's insane. And it is undervalued. So, there's that. But also be aware, we were just looking at their revenues as well, and they didn't do as well as they did last year. They did 8 billion dollars less. So just a heads up. Um, Anywho, if you've made it this far, consider subscribing. Let me know what you guys think of this stock. Have a great day. See you tomorrow.